All right, we are live. What's going on, everybody? Anyone that's in right now? I think we got like zero people. To those that will be coming in, welcome. It's been a while since I've shown my face, and I guess before I started everything, I'm wearing my indigenous indigenous shirt from Guatemala. It is Native American Heritage Month. So just be sure to like do what you can if you have the money to purchase like clothing or products from indigenous organizations, Native American organizations. It really helps them. So yeah, if you are able to. So thank you. So guys, and again, people coming in, welcome. As you could see by the title, we are going to be talking about investing, stocks, the stock market, and all that good stuff today. And I hope that many of you are willing to come in and have an open ear and be happy to listen to our guest Ramo. So welcome, Ramo. Good to see you.
Hi, Marcus. Good to be back. Thank you.
Yeah, it's always a pleasure to have you on, Ramo. So yeah, guys, before we get into the main part, I think I wanted to go over the community post. And that was what I had posted actually a couple of weeks ago, and it was before the right before the midterm elections. It was right here. I had said like big day for the U.S. midterms, and it was very interesting to see that like 26% people like put in Democrat, and then 20% put in Republicans. I always like to put in indifferent or don't like any either party or any choice, just to like give an option for that, even though it kind of might take away from the main point that I'm trying to get across. And I'll be honest, I was a little bit surprised of the actual results, because I believe the Democrats won the Senate, and if I'm not correct, the House as well. We're close to. I think there was like something between Herschel Walker and the other Democratic. What was his name? I forgot his. Anyway, the Democrat from Georgia, and to get down to the point, I had thought that the conservatives were going to be a little bit more successful, but they were not. So yeah, I just wanted to bring that up really quick. The next piece I was actually surprised about, and this is more of like a little news piece, was this community post by Crooks, I think that's how you pronounce the name. I follow some of their content, and this year, the Biden administration has sent $54 billion, and they still plan on sending another $37 billion to the war in Ukraine. So obviously, if you do the math, that's $91 billion, and that's insane to me, because it's just, if we just used a fourth of what we are sending over to help the people here, whether that's homelessness, drug issues, so many other problems that go on, climate issues, we could do so much good for society. Now, I obviously understand that Russia is an adversary to the United States, and I support Ukraine because they were invaded. But this amount of money is just it's too much. It's insane to me that we are really doing that. And if we look here, foreign aid to Ukraine, you see $54 billion, and then $30 billion by the EU, and then $33.7 billion by the UK. And then just another stat here is the US aid to Ukraine is $91.43 billion, and Russia's defense spending is only $77 billion. So that really shows how, just in my opinion, how overcommitted we are, I think. Why don't we make countries like the UK, Germany, France, do their part and, send a little bit more money than we are. I just wanted to get that out of the way, because it's something that's I've been thinking about for a while. And we'll get into the main piece here, is obviously investing. So yeah, Ramo, you are the most knowledgeable person, one of the most knowledgeable people that I know about this. And yeah, thanks again for coming on. But I think one of my first questions was like, why you feel that it is important, like during this particular time period, to talk about this, and for people here that are following and whatnot, especially those that aren't even invested at all.
Yeah, so I'd like to start off with how most of our people, when it comes down to demographics, well, we all know the ones who invest the most are either Asians or white people. Um, when it comes to our communities, we're always uh, emphasizing save your money, which is something that the banks have um, told everyone, especially our people, for the past few decades or for generations. They've told our people, save your money. And there's nothing wrong with save your money. It's just that if you're going to save 100% of your paycheck, it's going to be detrimental to you because the main reason is that because of inflation. So for every dollar you have locked up in your bank account, just lying there every year, it's devaluing itself. So in my perspective, I basically see it investing as if, let's say, for example, every dollar I put into investment out there, it's going to carry some type of prisoner of war. It's going to bring back more money for me. So I'm putting my money to work. It's going to bring me back more money or prisoners of war. And then I'm going to start growing my army by time. And I'm going to expand my army. And I'm going to make them bring me even more prisoners of war or bring me more cash so I can be wealthy and I can be financially free. So this whole concept of saving money is something that the banks have again told people for countless generations because it benefits the banks. When you save your money, let's say a recession hits, many times when a recession hit, the bank has given people excuses like, let's say you want to withdraw money from your bank account during the recession, the bank is going to give you a big excuse, telling you, "Oh, we're not available at this time. Please come back later." A lot of banks are going to do that, and some of these banks might default. And what happens is that some of these banks might default, and they might get away with some of your money, or probably worst case scenario, all of your money. So this is why banks are always emphasizing, "Oh, save your money with us," because they're the ones who carry the cash. So what I would do is, part of my paycheck, I would save my money, but then a huge part, I'd say probably 70 to 80% of my paycheck, I invested because I know that my money is going to be well spent in my investments, which we can talk about a little bit later. Depending on the investments and your money tolerance or budget tolerance, there's no investment for everybody. Everybody's going to have a different investment depending on age or what your budget looks like at the current moment.
Yeah, you made an excellent point, Ramo, and that is, it's mistakes that I have made, and that is just like saving all my money, right? In my younger years, I didn't take the time to learn about investing, so I would just save all my paychecks and just like watch my bank account. Like I'd be happy that I'd see it grow, my savings and checking, but like I never really put much thought into
Right.
what I could do into like the stock market and investing. And it's obviously a regret, but of course it's never too late. And I think the thing is I think maybe people might believe that it's quite difficult, or they might believe it's somewhat like they're apprehensive to participate in it. Would do you see that also from a lot of people? Like they feel that like to people that aren't really in the stock market and aren't into stocks, like they think it's too complicated because when you open up that website and you see like tons of like numbers going all switching all around and whatnot. You know what? I forgot. Is it the New York Stock Exchange website? I
Yeah.
believe. Yeah.
Yeah. Yeah, so basically, yeah, they do it on purpose because they don't want too many people investing, and they do intimidate with all these big numbers like ROI, or yeah, like ROI is basically return on investment, but they just people in this industry they just love to categorize it in or like jot it down into small little initials just to intimidate people. But I mean, it's not that hard as people really think it is. It's just a matter of getting your feet wet. It's just a matter of getting your foot on the door. It's really not that complicated. And nowadays, you don't have to go to an investment bank or go inside a bank or a brokerage firm. You could do it from your phone. You could download a broker from your phone, like Robinhood, E-Trade, Vanguard, or any other broker that you might find in Google. And from your phone, you could start investing right on your cell phone. Like you could basically just connect your bank account with your broker account, wire the money back and forth. And once you wire your money from your bank account to your broker, you can start investing.
Yeah. Thank you for that response, Ramo. Yeah, people could do it from your phone. Like it's really simple, but that's a good point again that you added that like it's done like that website, the New York Stock Exchange website is done on purpose, right?
Yeah,
Um, because I do feel that like even myself when I saw it, I got intimidated to see like all the numbers going and whatnot, and things changing from different stocks. Um, just gonna say hey to Al Red Dog, and I think someone asked if we could ask questions. Yes, you can ask questions. Um, so my next question for you, Ramo, would be just like, what would you see are the main benefits for? I know you kind of brought up one, right?
Yeah.
Like,
So yeah, so another main benefit to investing is that aside from your job, which is a fixed income job, you can make passive income from investing. Like let's say for example, you invest in, I'm trying to think of a company right now, Budweiser, which is a beverage company. You decide to invest in Budweiser because you know, like even during the recession, alcohol is going to go up. Like even during the pandemic, you saw like people consuming alcohol. So it's it's kind of a way to hedge yourself in a bear market, also known as a bad market. People in Wall Street love to use bear markets for any time there's a recession or there's like a bad stock market. But anyways, like let's say you invest in Budweiser and the stock and the company does well, the stocks go up. So you pretty much made a couple of bucks there aside from your main job, which is your fixed income. You also got your passive income on this side. And another thing that I would like to emphasize about stocks is that the good thing about investing in stocks is that certain companies actually give you a paycheck quarterly, like every 3 months, for just investing in them. You'll see this a lot in real estate companies, which I've invested in. Every 3 months or every 4 months, they send me a paycheck just for investing in them. Some companies will do that. These checks are called dividends, but these checks they are wired straight into your brokerage account or bank account.
yeah, excellent. Yeah, yeah, you get return
Yeah,
from investing. So I think that's the great thing to look forward to. So not only are you working your main job and then maybe a side job on the weekend, right? But you're also bringing in
yeah.
money from what you've started with these investments. I think someone had a question. Well, let me see here. Do you believe we should hire a financial advisor if we don't know how to invest?
So I'm half and half about that. Hiring financial advisors because this is information that you could that's public knowledge and you could you know like I'm gonna get I might get in trouble for this, but who cares? Um, so yeah, I'm kind of half and half about it. If you got the money, then sure, why not? But not so many financial advisors out there can get you um, more returns than what the stock market is going to give you. Like let's say for example, you go to Google, you invest in the S&P 500, which is um, which is an index. So you're pretty much like let's say you buy something from the S&P 500, you're pretty much buying one share of the American economy. The S&P 500 is basically the American economy itself. So you're betting with the American economy. So if you buy one share of S&P 500, you're pretty much it's like buying a share of all those profitable companies from the American economy. And a financial advisor, their job is to outperform the American market or hedge funds. These hedge funds, they try for their billionaire or millionaire clients. Their job is to make them more money than what the American market is performing. The thing with financial advisors is that their performance doesn't always, it either ends up being the same as the American market or a little bit lower. So you're better off investing by yourself, getting this knowledge from Google, or just investing in the S&P 500. Just buy an index of the S&P 500. You're basically investing in the American economy, and your investments will go the same way as the American economy. Um, so yeah, I'm not too fond of financial advisors unless they will make you more money than what the American economy is doing. So basically, if they're going to outperform the American economy, go for it. If you know them personally, or if you know that they're so damn good and making you more money than the American economy, go for it. Otherwise, I think it's a waste of money if they're going to give you the same returns as the S&P or as the American economy.
I'll try to help you out if you get in trouble for that.
Thanks.
Yeah, man. Yeah. Did you want to like talk about like somewhat like you have a lot of experience and knowledge about this?
Mhm.
So so are you cool with maybe sharing what you majored in?
Yeah, absolutely. So it's an interesting story of how I got into stocks because I came out of a community college. My major was in theater, so I got an associate's degree in theater, and I started college like because I went back to college again because I thought, hey, I'm gonna like I don't see a future with this. You know, like you really got to have some good connections to be an actor. So I just decided to go back to college and major in something. And I thought, oh, you know what? I'll go back to school, and in the meantime, I'll try to get some acting gigs. But I never got to that. So I ended up majoring in accounting, and then I went straight to economics. Um, During my time in college, that's how I got into stocks, because it was part of my major. So it wasn't mandatory to dabble in it, but I thought, what the heck? I mean, I'm already here. I'm already majoring in this. I might as well get more familiar with the world of finance. Um, so during my time in college, I just went down this huge rabbit hole of investments. Like there are so many books out there on investment philosophies, different ways of investing, and there's not really a size fits all. Again, like as I was saying before, it's all about budget tolerance or how much you can handle or how old you are. Like let's say for example, the best book that I consider, and I also consider this as the holy book for investors, is The Intelligent Investor by Benjamin Graham. I'd say if you're going to get into investing, I would suggest that's the first book you read. Um, it details and it's very knowledgeable. It tells you a lot about investing. Like it's for all ages, so it would tell you how much you should invest at a certain age if you're a teenager, all the way to your mid 20s, adulthood, or even senior year. So what the book is emphasizing is that the younger you are, the more stocks you should invest in, and the older you are, the less stocks you should invest in, and try to start investing in bonds the older you are, because bonds are a safer investment than stocks, which we might end up talking about later. But yeah, that's what basically the book is saying. Also, the book really emphasizes on how you should keep your portfolio like stocks and bonds, and during a bear market you should buy more bonds. Bear market again meaning that during a bad market you should buy more bonds, and during a good market, on the way when the market's going back up, when it's really down, is when you should start buying stocks. On the way up, you should start buying bonds. Is what I'm trying to say. When it's a good
Y-
market, you should. Yeah, I'm sorry. Go ahead.
Oh no, I was just gonna say thanks, Ramo, for answering the question.
Sure.
Yeah, I watched a video about the bonds as well. Um, they said it was like more secure in a
Yeah.
way. Yeah,
Yeah, they are.
yeah, but we can talk more about that. But this is the book here, the Intelligent Investor, um, and by far the best book on investing ever written. So, and it was by Warren Buffett, and I think most people know who Warren Buffett is. So, definitely check out the book.
Yeah.
But let's go back here. What do you suggest? Who has conservative with their IRAS and Roth accounts for years and now want to play catch up?
Not sure what you mean by catch up in the case that you want to take on riskier investments. I would have to know your age for that. What do you suggest for someone who is conservative with their IRA account and wants to play catch up? So if you're conservative with your Roth IRA or IRA accounts, I would say try to invest in REITs. REITs are real estate investment trusts, which I have some of my money in. If you might want to diversify your Roth IRAs into REITs, these are again these are real estate companies that pay you dividends monthly. Some of them are pretty good, and some of them are pretty decent. They've done well during the pandemic for myself. My portfolio wasn't really harmed, and in fact, it actually outperformed the S&P and all the indexes during the pandemic when I was invested in all these real estate companies. I could tell you my portfolio right now. One of them is Simon Property Group, the other one is Realty Group, and let me take a look. Give me a couple of seconds to look this up. I'm
No
sorry.
worries.
Yeah,
No
just
worries.
give me a couple of seconds.
Yeah,
I'm
yeah,
gonna share my
sure, sure,
portfolio with everyone here.
sure. That was an interesting story you shared, though, man, about your how you got into like accounting and whatnot, going from community college and acting is what you said in theater.
Yeah,
So, yeah, it's really crazy, and it's great though. It's a nice story.
thanks. Yeah, it's
Yeah.
been a journey for me. College was weird. You met a couple of weird characters and then some interesting characters, but it was fun overall. It was a good experience. I wouldn't trade it for anything. I have no regrets, honestly.
Yeah. Did you go to college in NYC then?
Yeah.
Okay, cool.
So so my portfolio is Realty Group, Summit Property Group, Store. Let me see. Um, Ticket Store Capital Corporation, and the last one is an index from Vanguard, which is BNQ, Vanguard Specialized Funds.
Yeah, thanks for sharing that, Rama. Uh, I think I was going to add one more thing. Someone said that you're right about banks. However, current rates for CDs are about 4 to 5%. Savings
That's
can be
amazing.
high. Yeah.
That
So,
is the first time I'm hearing about that. I'm sorry. Were you gonna say something?
oh no, you're good. You said it was the first time you were hearing about it.
Yeah, about CDs going between those rates. So that's pretty good, actually. It's almost the same as bonds. It's almost the same returns that a lot of treasury notes or government, or treasury notes are known as government bonds. That will give you the same return, 4 to 5%. Um, yeah, that's pretty good. Um, the CDs are different because, like, let's say you have a checking account. Sometimes I don't know if it's with your bank, Daddy Goo. I don't know if that's your bank, but my bank personally is not gonna do that with my checking or savings account. I would have to open up a separate thing where I would start buying CDs, give them my money, and then they're gonna give me my money back with that interest. But if your bank's doing that, then cool. I mean, by all means, go ahead. That's another way of safe investment. It's pretty much looks like the same thing as bonds. CDs are basically the same thing as bonds in a way.
Yeah. Thanks, Rama, for answering the people's questions and whatnot. I think we should. I should have brought up the other part, which is just like the risk of
Yeah,
investing, and so that's like
right.
where he talked about people being apprehensive, right? And there are like
Yeah,
certain risk, right? Like if the business isn't doing so good, then the returns won't be so high. You might have to like sell your stocks or things of that nature if you wanted to like talk about like the possible risk.
yeah, absolutely. There are a number of risks that come with investing, of course. Like, if you're gonna go into investing with the mind of gambling, then don't do it. This is called day trading or stock trading or um, yeah, you're gonna go with that mindset. Don't do it. You get your feet wet, investing slowly, and then over time, once you get your feet wet and investing for a while, then yeah, by all means, start day trading, start gambling a little bit. I would say use 10% of your portfolio. Don't go all out. Don't go crazy. I did this back in college, so I can tell you from experience. It's not pretty. Um, I got into day trading way too early when I was investing, and that was the number one mistake of my life. That is something if I would go back, I would tell my younger self, no, don't do it just yet. Um, get a little bit more experience and start reading more books, get a little bit more knowledge on this, and then you can start day trading again. So day trading is basically, for those that don't know, day trading is basically when you buy shares of a company for the short term. It could be a couple of days, a couple of weeks, or a month, and then you sell it later on. So that's the number one risk that comes with investing. Second risk that I want to point out is that when you're investing in a company, you are becoming not kind of a partner, but like kind of a silent partner because you're actually buying shares from that company in the hopes that this company becomes profitable, that they use the money that you put into them so they could further improve their own company. Like, let's say, for example, you open up a restaurant and then you decide to go public. You decide to, because you don't want to take out a loan from a bank. So you just decide to, hey, you know what? I'm going to sell shares of my restaurant to the people, and people are going to start buying my shares. I'm going to use that money to improve my restaurant. And if I improve my restaurant, the shares that I sold my people or the people, my clients, are going to go up. So that's basically it. Um, you're using your money to buy their shares to improve that company. And the risk that comes with this is that some people they fall in love with the company that they ended up investing in. This is a big mistake, and it's the same thing with relationships, and yeah, in your personal life too. Don't become too invested, or don't fall in love with the company because if the company fails and you start becoming obsessed, you just start thinking, yeah, you know what? You start being in denial. You start thinking, hey, yeah, you know what? This is just a minor setback. My company is going to come back up again. No, just don't. If your company declares bankruptcy or you see your company failing in a bear market or really in big trouble, take your money out. It's really not worth it. You're better off finding a better company elsewhere.
Yeah, that's what I thought about too. Is just like if you start to see things are going down with that company,
Yeah,
just like and get out like immediately.
yeah,
Um, I wanted to bring one thing up that you had said earlier, and it was just like about the financial advisor, right? Like just use your phone. And I think that's some pretty good advice, man. Like, especially in this day and age where we can find so much information just by watching like
Yeah,
a few videos and whatnot, right? Like, I literally watched, like I told you, videos from Warren Buffett and a few other people that were in the stock market. I learned
right.
so much in like such a short time. Um, so I hope there aren't any financial advisors that are watching right now.
Oh boy.
Yeah, well, there's good financial advisors, but I got the main point that you're trying to explain and to convey to the
Yeah,
audience is that there is like a lot of information to find that you can learn from, um, and books as well, like the one you had
right,
mentioned.
right.
So, so then like getting into stocks and whatnot, right? Like I think maybe it's good to like I don't want to say like baby steps, but like how to like if I'm like a first person, right? Like I have no connections or anything to the stock market, right? So I'm asking you like how to what's the best way like to engage like with the stock market? Like what are the best stocks to like get involved in? Like you said, do some research on my own, right?
Right.
And then once I have enough of an understanding, then what would you suggest is like the next step? Like find out like what are the best like stocks right now, like
Yeah,
that's going on, then put my money
right.
into yeah that stock. Sorry, I'll let you talk.
No, no, it's cool. Yeah, it's a good point that you brought up. So this is the second book that really helped me back in college. It's called One Up on Wall Street. Um, that so this guy he has a good investment philosophy, and so throughout the book he pretty much outlines invest in the industry that you're familiar with or the stuff that you know. Like let's say for example, let's say you're the type of person who plays video games and you're really familiar with that industry. So you know the pros and cons. You know what company might be profitable, and the other you know which company sucks at making video games, or which company is good. This guy pretty much emphasizes get familiarized with an industry, and you might outperform what the people what the people on Wall Street are doing. So basically, like yeah, going back to like let's say you're a big time gamer, or let's say you love restaurants, you love to eat out, like you're a foodie, and you know which restaurants are good, and those restaurants have stocks to sell. So you basically know which ones are going to be profitable. So when it comes to investing, I nobody can if somebody tells you, oh, invest in this company or invest in so and so company. I'm not saying they're full of BS, but you have to be careful with that kind of advice. Like nobody can tell you, oh, invest in so and so company. Not even I, unless it's a hedge fund or somebody who's been very well in their profession, advising people financially. Um, you're better off investing in an industry that you're familiar with. Like for me, for example, my portfolio is mostly real estate because it's an industry that I'm very familiar with. Or I have a couple of stocks that like Budweiser, which I mentioned earlier, alcohol because you know I like my beer. Like I know which certain beer tastes good. And I've also every time I go out to a restaurant or to a bar, I'm very observant and I know which beers are bought mostly and which ones aren't. And it's not just in the New York area. Like when I've been to other states too, I try to get a gauge on the market that I'm investing in. Always got to keep your eyes open. Like if you're going to invest in this, if you're going to invest in any type of market, try to keep your eyes open and don't just limit yourself to one area in the country. If you're going to travel a lot of your own home state, definitely keep an eye out for people that are buying your products as well. Check the demographics or check what kind of people, like is it old, elderly, or racial demographics. Yeah, just keep your eye open for these things. Again, I wish I could tell you what investors or finance people call the alpha thing, finding alpha, meaning how to the one portfolio that will outperform the market. I wish I could tell you that, but it's something that nobody has ever found yet. So
Yeah, thank you, Rama, about that. Um, yeah, I think it is important to like just find out like going into the demographics and like what's like who's investing in this and how's it doing in this stock and in this company, and if it's like really worth like your money to
right,
put into.
yeah.
Um, I think what we want to talk about is oh, let me see if anyone had any questions in the comments really quick. It's been pretty chill so far in the comments. um,
Haven't seen them yet.
yeah. Oh, it's just been a few questions and people talking about like stocks and trades.
Yeah.
Oh, someone brought up crypto.
Ooh, crypto days. We should be looking to get a new way. Yeah, crypto. I'm not too knowledgeable about that, to be honest with you. I have some Bitcoin. I have some Dogecoin personally, but I'm not very knowledgeable yet in that area. But if you like it, this might be something worth looking into. This might be something you should look into if you're really interested about crypto. But no, I don't dabble too much in crypto. I have a small percentage of my portfolio into it.
How long did you
Sorry.
say? Oh,
Oh no, I was saying sorry to that person. Sorry, I couldn't be helpful.
oh, it's all good. You got the answer, whatever he wanted. How long did you say it took for your portfolio to like come together?
Mm, so come together as in becoming profitable or just growing over time.
Growing over time. Yeah, sorry.
So for my portfolio, I didn't really start seeing the changes until 2 years after investing. After 2 years, it really started going up. It really started hitting. Yeah,
Okay, so a couple of years. Gotcha.
yeah.
Okay, cool.
Yeah, it was very slow in the beginning, but afterwards, after you accumulate all those dividends, all those checks coming into you, that's when it just started making the jump. Like you really start seeing a huge difference of what a little measly dollar can do when it's added to your portfolio.
Yeah, that's true. Really does make a difference. Thanks, Ramo. And then I think we wanted to talk about bonds and just like
Yes,
what's so important about them that maybe a lot of our people don't know and maybe would like to learn more about.
right. So bonds are much easier than stocks. To everyone's to everyone's benefit, it's so much easier than stocks, and they're much safer investments than stocks actually. Because when everything is falling apart, when there's a recession, or when there's a bad market, um, bond investors are the first who get their money back before stock investors. So let's say a company declares bankruptcy. If you're a bond investor, then you're the one who's going to get paid back before the stock investor gets paid back. Um, and sometimes when you're a stock investor and a company goes bankrupt, they don't even return you all your money. They return like partially of what you invested in. It's happened to me once. Like I'm invested in some startup company. This was years ago when I was back in college. Some startup company that was selling marijuana in Colorado, and and they declared bankruptcy. And when they did, I wasn't a bond investor at the time because I didn't dabble in bonds, but I was a stock investor, and they returned a part of what I invested in them. So I just thought, hey, how can I avoid this next time? All right, so next time I see a startup company, I'm only gonna try and buy bonds in the beginning. Then after a couple of years, might familiarize myself with this company. Then I might start buying a couple of stocks. So bonds are basically an IOU, which means that you're basically buying debt. So let's say bonds is really easy. It shouldn't be intimidating. Let's say, for example, let's say I need to borrow some cash from you, and I tell you, hey, let me borrow $10, and then 1 year from now, I'll pay you 10. I'll pay you your $10 back plus with interest. Or you know what? Let's make this easier. I'll borrow $100 from you, and a year from now, I'll pay you back with 5% interest. So 1 year from now, I'm paying you $105. So that's basically a bond. You're just buying debt. You're basically lending money to the government or a corporation or a mortgage. It's basically it. It's lending
Interesting.
money, just
Yeah.
lending money.
And for someone that's getting into investing for the first time, you would say that bonds would be safer. Or
Yeah, heck of a lot
maybe.
safer.
Yeah.
And going back to what the intelligent investor was saying, the older you get, the more you'll have to allocate bonds into your portfolio. Whereas in contrasting to the younger you are, the less bonds you would have in your portfolio. So yeah, but you know what? If you're not, you could be a young person too and invest in bonds, have a full bond portfolio, no stocks. It's up to you. Everybody's different. It's just a general outline that that book has made for a much easier investing life. But yeah, bonds are the safest investments out there, much safer than stocks because you're almost guaranteed getting your money back, especially if it's a government bond, which is the safest out of every type of bond out there. You always guarantee your money back because unless there's a civil war or the government falls, then you're guaranteed to make your money back. Um, Going into corporate bonds, which is pretty much buying bonds or lending your money to private companies. That's basically it. There's like a chart that Moody's has made that everyone follows. Like, let's say, for example, the AAA chart, or it's just like a hierarchy that goes up and down. That's in initials. Like, let's say, for example, you want to invest in a AAA bond. AAA basically means those are the safe bonds, right? But but once it starts getting down into the alphabet, it means it's a risky bond to invest or to lend money to. Like, let's say, for example, I see that I'm going back to the startup company that was selling marijuana in Colorado.
Yeah.
If I went to the bond chart and looked up their bond rating, it would have been probably an F or a D, and instead of an A. So that tells you right off the bat that it's a risky company to lend money to.
Okay.
So that would be called a junk bond, bonds that are way too risky, or that are very low in the hierarchy. And now mortgage bonds. It's pretty simple, really. And people ever wonder when they take out a mortgage, where does that money go, or like who's it backed up by? Well, it's basically backed up by mortgage bonds. So you're pretty much lending money to the mortgages just in case the person who bought the mortgage defaults or has a foreclosure. So that you're basically lending money to this mortgage, expecting some money back in return, expecting your money back plus interest.
Oh, so there are definite, obviously, like risk then. Like if you
Yeah,
have to really be certain that whoever you're lending your money to, that the government, like the company, corporation isn't going to fail, or
yeah,
doesn't look like it's going to fail,
yeah,
right? Because that
right,
could really affect you in the long run, obviously.
right, right. And that's the reason why they made that chart. It's called the Moody's chart.
Did you send
I
that to
think,
me? Sorry.
yeah, yeah.
Oh, so, yeah. Let me pull that up. My bad.
No, that's cool.
Thanks. Is it the hold on a second, guys. Just gonna find that here. Wasn't this one?
Yeah, so that chart.
Oh, was this one? Okay, okay.
Yeah, the chart. So in the investment grade chart. So you see at the top of the hierarchy, you see AAA, which those are safe. Those are safe bonds to buy. Like, let's say, for example, you want to invest in. I'm trying to think of a random company, Walgreens. Walgreens would be probably in the AAA or in the A investment grades, right? So these are safe bonds to buy because you know you're going to get your money back. Walgreens is going to give you your money back plus interest for borrowing your money. But as you go down, like let's say the C, in some ratings, some companies might have an F or a D or an E. But for the sake of this one, it's just Moody's. We're going to use Moody's. If you go down, you see the red C. If you go and look up a company's bond rating and you see this, that's a risky company to loan your money to or lend money to. Like going back to that marijuana company, it probably would have had that rating of a C if I looked them up and decided to lend them my money. So these are called junk bonds, the ones who are risky.
Okay. Wow, this is really detailed. It definitely shows a lot. Like just to, so I see the high default risk, and it's showing about. What was I going to bring up in here? The investment grade too.
Yeah.
Yeah. Thanks, Ramo. Let me take that off really quick. I think someone had a question. No one had a question. Was there another graph you were going to talk about? I hope we didn't pass that up, or we're going to show that in the next couple minutes, maybe. The FHA versus conventional.
Oh yeah, we're going to talk about real estate.
Yeah, and then the SP 500 index we'll talk about a little bit later too.
Yeah, absolutely. Yeah.
Okay, cool. I just wanted to make sure I didn't miss about like bringing that up or not. Awesome. So yeah, the video that I had watched, learning about government and corporate bonds and like which one was like better. I thought it was also like a lot to like pick up in terms of like, it seemed that government bonds could have been a safer bet than corporate because government had a lot more stability, I think. Yeah,
always.
Yeah. But in the other video that I had watched also, they had said that like you can get more money from stocks than bonds. investing in stocks than bonds. Would
Yeah,
you agree? Like,
yeah,
yeah,
I would
but it's
agree.
less risky. Okay, got it.
Wait, I'm sorry, say that again. You get more money from bonds than stocks?
No, you get more money from stocks and investing
Oh
than
yeah,
bonds. Yeah,
oh yeah, always, yeah. But there's
yeah,
more risk.
yeah.
Yeah.
I think someone said here that crypto is cryptocurrency was a scam. I don't know. I've heard things.
Yeah, me too. I don't want to make an opinion about that because I'm dabbling in crypto, and me saying that it's a scam, it would make me a hypocrite. I mean, yeah, it could be. I mean, I wouldn't be surprised if it is, but yeah. I mean, if it's a scam, I mean, and if you got some money to spare, then why not ride the wave for a bit and just make some profits and then get out? You know, I mean, but I'm not gonna say it's a scam just yet. I wouldn't. I'm gonna wait. I'm gonna wait probably till 2030. Probably till 2030, we're gonna see if it's a scam or not, or a little bit earlier than that.
This guy's saying a lot of things are scams. The government is a
Because,
scam.
hey,
Social
that's true. I
Security.
mean, that's true. That's
Yeah, a lot of things are scams. Um, so yeah, I think we could talk about the housing investments and like real estate, or talk about options like briefly, if you wanted to. Um,
Yeah. So we before we go to real estate, if you could
mhm,
pull up the S&P 500 thing, where we were
yeah.
talking about stocks earlier.
Mhm.
Yeah, guys. So this is the S&P 500 index. So it's basically the American economy in essence and how it's performing. You can actually invest in the American economy and make profits by riding the wave of the economy. So basically, if you buy a share, like you could just go to your broker and type in SPY, which is an index fund that follows the S&P 500. So you just basically buy a share of SPY in your broker, and you basically have one share in the American economy. I'd say if you're going to dabble in stocks and get your feet wet, I might not recommend a specific company for you all, but what I would recommend is putting your money in this first. If you're going to get your feet wet in investing, put your money in this first before you start buying individual stocks of a private company or of any company, unless you know that industry well by heart. Um, buy shares from this first.
Yeah. Thanks a lot for telling me this. I learned. I'm just learning about this right now too.
Oh, cool.
Um, yeah, yeah. Thank you. I'm sure a lot of other people are as well. So, um, someone have a comment here. Inflation. This high utility, high rents, high fuel markets are good. Yeah, I would say it is hard for a lot of people. I think in this period for people to want to invest. I would say because of like inflation and whatnot as well. So
Yeah,
it's definitely like a lot of time you have to put into that decision when you want to,
yeah,
you know,
absolutely.
risk or not. But yeah, thanks again, Ramo. And then we could just go straight into real estate or talk about options. You said
Um, Real estate.
real estate sounds good.
I want to leave the juicy stuff for last.
Sure, no problem. Yeah, so housing investments and real estate. That was I had watched a video about that too, by the way, before I watch videos on like everything, so I could be a little
Oh,
bit more
nice.
knowledgeable. And I did it. I mean, I knew like I have family that has like a house, like, and that has tenants and whatnot that owns real estate, but like I
Yeah,
just didn't realize how much money it really was to like take care of so many things, so much like, maintenance, and
yeah,
dealing with like tenants that might not be so positive to work with.
yeah, yeah,
Um,
absolutely.
yeah. So I was gonna ask you, like, what would you say like the benefits are again for like our people and like audience that like really don't know that much about it, and like what would they see?
Yeah, so basically, real estate investing, it's basically it's a good hedge against a bad economy. Like, let's say, for example, like let's say the stock market's down, um, but you have tenants that pay you rent every month. That's some passive income that you're making when your stocks are failing you. So it's definitely a major benefit, and it also, I wouldn't say it makes you quick money, but it's stable money that over time, if you give it time, there are times when it might outperform your stock portfolio if you invest right in real estate, or if you invest at the right moment in real estate. Like, let's say, for example, a recession hits and you save money, and let's say the housing market comes down during the recession and you start buying houses at a huge discount. You basically locked in at a good profit there, because when the economy heals again, you're going to pay off that mortgage much quicker than the 30-year or 15-year loan that you decided to take with the bank or with whoever. Um, so yeah, I mean, it all depends on the good momentum that you took to buy a property.
Yeah, I would like to add on to that is like, from what I learned from the video, you want to have a lot like saved up, right? And be sure that you are investing in stocks or something where you're having a lot of income come in before you make the decision to get into real estate, whatnot,
Yeah.
investments. Would you say, I'm going to kind of combine like the working with tenants as like risk. um, would you say, and then maintenance as well? Would you add any other risk to that, to getting involved in housing investments and how? Sorry.
No. It's fine. For the risk, you have to keep in mind that when you're buying a house, it's kind of like a business that you have. There are repairs that you might have to consider. Like, let's say if you bought an old house, there's a high risk that you might have to have a lot of repairs. Like, let's say they might have an outdated stove or outdated pipes, or worst case scenario, they might have asbestos in the house. These are things to consider when you're buying a really old property. When you're buying a new property, new properties or houses that were built recently or like a couple years ago, obviously they're going to be more expensive than old properties because they're brand new, but they're definitely not going to have as many problems as the old properties. You won't definitely see asbestos or anything malfunctioning in a brand new property or in a brand new building. So yeah, there comes a risks with buying old properties, and also certain hazards that you have to keep in mind, that if you're going to have tenants in here, you're going to have to really check out the property itself. And because if something bad happens to the tenants, you're the one who ends up in a court or losing money. But worst case scenario, like you might end up going to court, and that's the kind of drama that you don't want in your life. Um,
Yeah.
and going back to what you were saying, you brought up a good point with tenants. So depending on the state that you're in, or I'm gonna give my state an example, like New York, um, the laws tend to favor more the tenants compared to the landowners. Like, let's say for example, let's say a tenant cannot pay rent on time. The local laws here, they protect the tenants. So the tenant, if they decide not to pay rent, they could stay for months even after not paying rent. They can basically live for free for a couple months uh, before moving out or looking for a new place to live in. And yeah, a lot of people might see this. Yeah, well, landlords are evil, et cetera, but they don't consider the fact that not all landlords are the fat rich dude that you see mostly in cartoons or on television. It's usually working class people who are landlords themselves and who have mouths to feed, families to feed, who actually depend on the tenant rent to feed their own family, because some of them don't even have real jobs. Some of them just depend on the property themselves. Um, so yeah, I mean, these are things to consider whether you live in one of the states that favor landlords or favor tenants. These are also risks that you might have to consider, or your local municipal laws. Because I do know upstate, I think in Buffalo, in upstate New York, they do favor landlords more than tenants. So I think it's kind of a New York City thing over here.
Yeah. I heard that also like apartments and like houses. Well, it'd be like you said, like in upstate New York, it's probably less expensive. Obviously, like
Yeah,
around like New York City, I can imagine it costs like an arm and a leg
yeah,
uh,
yeah.
to get involved in
Twenty five
housing there.
hundred, 2500.
Yeah, it's quite a
It's
lot.
it's insane.
Yeah. Um, and then there's a third piece of this, which is like programs for borrowers. So I think that what I wanted to add about that was just like looking into, was it certain programs to start up to like get involved in real estate investments?
Yeah.
but I forgot what programs like. I don't know if there were certain programs that you were familiar with
Yeah.
for people that were. Yeah.
Oh no, yeah, I was gonna say I'm familiar with most of them. So basically, it's very simple, really. It's the two basic ones. The ones that everyone's more familiar with are the FHA loans, which are backed by the government, and conventional loans, which are backed by the banks. The only difference is that for an FHA loan, it's the most common one. It's the most simple one for anyone to buy. And I would suggest they get an FHA loan before a conventional loan, or they start looking for an FHA loan before they look out for a conventional loan. So basically, an FHA loan, it's government backed, and you could have a low credit score and still apply for an FHA loan to buy a home. The only drawback is that they do have this thing called this mortgage type of insurance money that you might have to pay along with your mortgage, because again, since you have a low credit score, you're at risk of defaulting or not paying them back. So they do have this extra cash, quote unquote, insurance that you might have to pay along with your mortgage. Going into conventional loans, they're a little bit more strict. They're backed by the banks, and I think you need, like last time I checked, you need a 620 credit score or higher, so you can apply to a conventional loan. And they do have mortgage insurances that you have to pay along with your mortgage monthly, but only if you pay, I think, only if you pay below 20% down payment. Only if you give a below 20% down payment, then I do believe you have to pay this mortgage insurance monthly with your mortgage.
Okay. Wow. That's a lot
Yeah,
more than I thought.
yeah. There's
You'd have to-
other I'm sorry. Go ahead.
oh no, you're good.
I was gonna
I was
say,
just. Yeah, yeah.
sorry. I was
You're
gonna
good.
say
You're good.
there are other loans out there. Like in New York State, for example, there's a Sunny Mae loan, SONYMA loan. Here, specifically here in New York City, for those of you who live out here or in the state of New York, it's another loan you could look into. It's more similar to the FHA loan, but the good thing about this is that it gives you an extra $15,000 credit to help you or to aid you in the housing in your mortgage. So it's basically free $15,000 that you could use. I'm not too sure about the VA loan. Last time I checked, but don't quote me. I don't think you have to be a veteran to apply for the VA loan, but don't quote me. I might have to double check on that. The VA loan is, I see a lot of veterans who served in the armed forces who do use this to buy a house.
Yeah, yeah. I see and hear about that too. How they do get loans, and I think it's like 20% off. Um,
Yeah.
yeah, when they make like the initial purchases and whatnot. I think the sloth here said thank you for your insights.
Hey, Sly, no problem, dude.
This person said, "Have a good day. Eat well as you can. Next year might not be as feasty." Interesting. Yeah,
Yeah.
next year might.
Thank you,
I don't
Cat.
know. Huh?
No, I was saying thank you to Cat Terrell.
Yeah, yeah, yeah. Thanks, Kat. Um, so, yeah, thanks for bringing everything up, Ramo. I think we can leave the final piece now if you wanted to bring up still about
Uh,
options.
yeah, options, the juicy stuff.
Yeah, right.
Um,
So,
yeah.
sorry.
No, go ahead.
I was just going to ask, like, yeah, so for a lot of our audience, maybe they don't know what options are. When they think of options, it's not what we're thinking about, obviously. So, maybe if you wanted to share about like what options were to our audience, and like, are they worth like purchasing?
So to start off with options, they're the most riskiest investments alongside forex and crypto. Um, so before you dive into options, I would suggest get familiar with stocks. I lost a lot of money doing options. It's very super profitable. You could make thousands of dollars even by putting $100. You can make like over 1,000 in a matter of in a matter of minutes, and it's super scary. You get this huge adrenaline rush. It's super scary to start trading in options. You really have to know your stuff. I would suggest buying books or watching a couple of YouTube videos before diving into, or get a um, fake money account. I know TD Ameritrade does this. I know Webull does this. So you could download those two brokerages, They give you fake money to play like make believe like you're investing. That way you could get some practice, get your feet wet with options. Basically, what an option is that you're buying contracts for stocks, or yeah, basically buying contracts for stocks. Like let's say, for example, when you buy call contracts, a call would be basically you're buying contracts in the hopes that a company goes up. And when you buy a put contract, put is the opposite. When you buy put contracts, you're basically buying contracts in the hopes that the company goes down. So the thing about options is that you can actually make money from a company's downfall. So if a company starts going bankrupt, you make money off of that. Stocks have this thing called shorting, which is very similar to this. But going back to options, yeah, put contracts. Like if you know a company is doing bad, you can actually buy put contracts and profit off of their demise, which sounds evil. I mean, depending on your own moral standpoint. I do think some companies are sketchy out there. I do think some companies are scams. So I do believe that some companies do deserve to go bankrupt. And when this happens a lot, that when you have a bunch of people, or when Wall Street, when a lot of financiers on Wall Street or investors are buying put contracts for a company's demise, there's this kind of social thing where a lot of people start jumping on that train and start going along with the current, and this further enables that companies go bankrupt or end up not existing at all anymore. So that's basically what options are. It's just buying contracts, either in the hopes that a company is profitable or in the hopes that this company falls. So there's
That
power to
sounds,
it too.
yeah, there is. Only sounds slightly evil. I'm kidding.
Yeah. So if there's a company you guys hate out there, gather a group of friends, and you know what, just start buying put contracts. You could put pressure that this company's gonna fall, and people might jump on board. I'm kidding. Don't do
I
that.
knew I should have put money in Toys R Us. I'm kidding.
Yeah. Oh, dude. Oh, you would have made a buck out of that. Oh, jeez.
Yeah. Well, maybe they'll come back and then start to fail again. I'm kidding.
Yeah.
Think, what are some good financial books you recommend for the average person who sucks at math?
Well, aside from the two financial books that I mentioned, which is very basic, there's no complicated math like The Intelligent Investor or One Up on Wall Street. Um, Jack Bogle, if you look him up, John C. Bogle or Jack Bogle, if you Google that guy, he has a very good insight on buying index funds. As for retirement and buying a home, I would suggest, what was the guy's name again? The guy who's give me a couple of seconds. I'm gonna bring
Sure.
that book up.
Sure. No problem, Ramo. So yeah, guys, we're kind of towards the end of this live. Managed to keep it under an hour again. So if you have any other questions, feel free to send them our way about this.
So if you've been on YouTube, for anyone who's a real estate person, if you go on YouTube and you look up the Bigger Pockets podcast, Brandon Turner is a huge guy in there. Brandon Turner, I love his books. He's very knowledgeable in the real estate industry. He's written a couple of books. I have a couple of books by him. Brandon Turner books. Let me see. I have one right here, but I'm trying to look for another book that he wrote. This is one of the books that I have. Investing in real estate with no money or low money down.
Okay. I can put that in the comments.
Yeah, but to the slot, what you were saying, the time buying a home, the best book from Brandon Turner would be Rental Property Investing. This is the number one book I would invest. Like I would consider this the holy book for real estate investors.
Rental property investing. Okay.
Yeah, by Brandon Turner. Yeah, I really like that guy when it comes to real estate. He's so laid back, he's chill, and super knowledgeable on real estate. It's not one of those boring podcasts where you have a guy speaking in a monotonous voice, or like he's just bored out of his mind, like those old high school professors. No, this guy is very chipper. Every time I watch his podcast or other people from Bigger Pockets, it's always a good vibe. It's a good attitude.
Yeah, thank you, Ramo. I'll have to check him out. Did you say it's Brandon Turner?
Yeah, Brandon Turner.
Okay,
They also have a YouTube channel called Bigger Pockets. All they talk about is real estate.
YouTube channel. I'll put it in the comments too. Bigger pockets.
Yeah.
Cool. Yeah, the sloth said thank you. So,
No problem, dude.
yeah. By the time I graduated from high school back then, a few of my former graduate classmates also went into real estate. Oh, Ramo disappeared. Okay. So, yeah, I heard getting into like real estate and like working as a real estate agent, it can definitely be rewarding, but can also be hard, I would say. Would you agree, Ramo, with kind of like being a real estate agent? I know you're not a real estate agent, neither am I, but I heard it's like
Yeah.
really rewarding work and you make a lot
Yeah.
of connections and it pays
Yeah.
all right. I was going to share the link in case anyone wanted to like come on and ask any other questions, but yeah, please ask anything else, but then we'll probably wrap things up. But Ramo, I think that went really well, so thank you for coming on. A lot of people had questions.
Sure. Sure. Not a problem. I find I would like to add. It's a good thing that last person mentioned real estate agent because going back to what I was saying, that your 9 to 5 job or your regular job is a fixed income. So you basically know what you're getting. You basically know how much money you're going to make throughout the year with your job. Unless you get a raise, you pretty much know how much money you're going to make. But when you get a commission-based job, like the one this person mentioned, a real estate, it can be very profitable if you're a social butterfly and you talk to a lot of people, or if you have like that hustler ambition, hustler mentality. If you start selling houses, even by just selling one house for a client in a year, that's like a 30K to 50K commission into your into your checking account. Um, so yeah, I would say that's a good job to have as a side, not a side gig, but like as a second job. Let's say you have a 9 to 5 job on Monday through Friday. That's something you could do on the weekends. Actually, it's not pretty bad. Um, or even after work, after you get off work after 5, you could go into your real estate job, which is pretty flexible. It has the flexible hours because you're basically working your own hours in that type of job. It's commission based, so you could use that time right after your job to go networking, go to a bar, go to real estate events, network with people, meet clients, meet potential clients, meet other agents, talk about real estate. Just like try to pick up tricks of the trade, like socialize with people basically. And this will make it to social butterfly in of itself. It's a process, but it's all about exposing yourself out there too.
Yeah, good point. You definitely like it's good to have that like hustler mentality if you're going to get
Yeah,
into like commission jobs and whatnot. Because I have family that was in real estate, and as I had said earlier, it's like really rewarding. But you got to like be good at like talking with people, have good communication, and all that stuff.
yeah.
I think the sloth here had questions. Ramo, what do you think
What do
native
you
families should be? You can read it. Yeah, sorry.
what do you think native families should be doing to do better with money? Look, dude. Again, I wish I could tell you. Personally, for me, it all comes down to your budget tolerance, and also comes down to your age group. Like, let's say you're a young person in their 20s. If you're in your 20s, I would heavily emphasize going for a little bit more on the risky side. Or 20s or early 30s, start doing risky investments. But as you get older, you're more stable. You have a family, so you actually have less of an option to start dealing in risky investments like options or stocks. So I would say go to bonds or go to safe stocks or invest in safe companies. If you have a native, if you have a family, if you have a family for you right now, I would say try not to dabble in risky investments like options, unless you're well off and you come from a upper middle class, or if you're like a rich family, then sure, why not? Other than that, like if you're average like the rest of us, then I would suggest not to do it.
so we can stop preaching communism talk.
Oh yeah,
Fine.
heck yeah, exactly, dude.
Finally get a lot of money. I like money.
Yeah,
um,
money's a tool. Money is basically a tool for you to accomplish your dreams. Money should never be the thing you worship. It should be used as a tool to accomplish whatever you want to do. Because unfortunately, we live in a world where where money does get you what you want. Money with money, you could buy your freedom. With money, you could buy more time. You could buy vacation. You could buy the stuff that you like like a nice clothes or like a that nice bed or a vacation to some tropical island or meeting new people or food like tasty or even healthy food. There are some
yeah,
healthy foods out there that are expensive. It's not available to everybody. So you have access to exclusive foods that otherwise regular folk will not eat.
yeah. There's so many like things you can start, like you said, healthy food,
Yeah,
traveling, and doing all these things. So yeah, I would also recommend, like, even though my experience is not so much, just like investing early, but just making sure like you're doing like the research and what you know you need to do to better yourself, better your situation. You know, recognize the environment that you're in, um,
yeah,
and not going all in at once, right? Like putting like most of your money into a stock. But
exactly.
Ramo's the expert, so I let you do most of the talking for that. Uh, I think Sloth had another question. What are some hacks for natives so we can be at the same level as other groups to compete on the world stage? Yeah, like you had brought up earlier, Ramo, like how white Americans and Asians are really big into stocks, and you see like our people not so much into it. You would say,
Yeah, absolutely. Yeah. It's because we're intimidated. And I was intimidated at that point. The first time I saw that, I was like, okay, how do I do this? But then I kind of forced myself because I thought, heck, you know what? Like, I want to be above average. Like, and again, there's nothing wrong with being average. But I want to say that I don't like being average. I like having a little bit of the taste of a fine life for myself. I mean, if that kind of lifestyle is good for everybody and everybody can have it, then cool. But unfortunately, we don't live in that reality, and so many there's only limited resources that we have on Earth. And but yeah, I mean, like I was saying before, um, we're mostly it's because we're intimidated, and it's because our parents. Speaking of the older generation, they didn't really raise us with that kind of mindset. But you would see this mostly with white or Asian families. Their parents already, or even grandparents already started investing, or they had the concept of investing. They know the importance of investing is a lot better than saving money, which is being preached within our families.
yeah, definitely. I also fell into this, as well, right? Just like
Yeah,
being taught like to save, and I wish I would have, yeah, learned more about investing. And then
hacks would be to invest. That's the hack.
yeah, invest definitely. But and then Francisco says start learning about crypto. So yeah, you do crypto if you want, but yeah, I like your advice, Ramo. So definitely, if I was 18 or 19, I would stick with what you said.
Yeah.
But yeah, if anyone didn't have any other questions, I think we'll wrap this up. It's yeah, like I said, as far as final thoughts, if you're not into investing and you have like enough money to invest, like I would put whatever things you had on hold in terms of like leisure, right? And definitely start to invest because this is your future that you want to secure. You want to secure future. And by getting involved in investing, you can do a lot, not just for yourself, but for your family and for your kids as well. Um, so don't be like what I did and just like go on leisure trips in my past and not thinking about investing. And, so yeah. Uh, Sloth had two more questions, and then I think the Sloth is good.
Yeah.
What budgeting method do you use? And then what do you think about only buying with cash?
Budgeting method, as in my personal finances or stocks. Okay, so I'll tell you my own personal finances. Um, for budgeting my personal finances, I only buy what's necessary. I'm a minimalist throughout most of the year, but maybe once a month I might buy something not expensive, but like a cool shirt or some gym gear, or probably something that's a little bit pricey. Probably either once a month or once every 2 months. I'll make a habit because again, like I'm a minimalist. Um, I try to save up my money to buy a property. And going to my stocks, currently my portfolio is 80% stocks and 20% bonds. And as I was saying before, those real estate companies that I mentioned that I have in my portfolio, they make up most of my stocks. And there's a small part that I invested in the American economy, which is the S&P 500. I'd say about 10% I invested in the S&P 500.
Good. And I'm sorry, Rama, did you say that did you get help with putting your portfolio like together, or did someone like teach you about everything, or you kind of just like self-taught, like you did it all on your own?
Oh no, I did it all on my own. So aside from the college courses that I was taking, which were teaching me finance, I've also dabbled in. I would go to the library, I would go to Barnes and Nobles and start buying books on finance, or even borrow books on finance. And I came across a bunch of different um, investment philosophies. There's a bunch of them out there actually, and it's I try to find the one that best fit me. And those two books that I mentioned, they're very knowledgeable. Those two books, and it's basic language. They don't really get to technical, so it doesn't make it boring for the crowd. So that's why I like those two books, especially Intelligent Investor, which is known as quote unquote the holy book or the Bible of investors.
Yeah, thanks, Ramo, for sharing that. Yeah, because I feel like you've learned like so much in such a short amount of time, and
Yeah,
it's definitely great that you did a lot of things on your own, and it paid off. You know, like you took life seriously, and you have that mentality to want to keep going, and you're not satisfied with just like you said, being average, right?
yeah,
You want to do the best you can, and I have that like sort of mentality too. Like I guess like we're starting this YouTube channel and whatnot as well. Um, always want to keep going, and always want more, and what I can do to better myself or ourselves too. And this person, one last question is: do you think Ramsey uh, gives good financial advice?
yes and no. There are some stuff that I disagree with David Ramsey in the past. In regards to stocks and real estate, he made a comparison between stock and real estate, and he didn't take into consideration how the market affects how a market can affect both industries. So it isn't really stocks versus real estate. Sure, most of the time stocks might bring you more money mostly, but there are times when real estate can outperform the stock market. Like you buying your properties can bring you more revenue than your stock portfolio. So that comparison, I wasn't too on board with it. Um, it's been a while since I watched the video. I might have to go back and watch the video again. But he overall he does give good financial advice, but there are some points that he has brought up in the past that I just didn't agree with.
Thanks for sharing that, Ramo. Yeah, I had also heard like in the past, like well, actually, it was like 10 years ago when I first heard about David Ramsey, right? And I was told to read his book, or just like kind of read a few chapters so I could learn more like about how to invest, and I did not. So
Yeah,
I regret it. But there's two sides of one coin. So there were some things about Ramsey that maybe weren't so good. But yeah, other than that, I don't think anyone else had any questions. So I hope everyone enjoyed that stuck around. um, and I had fun. I learned a lot. So thank you, Ramo, for coming on.
sure.
Yeah. Did you have anything else you wanted to add, or you good?
Nope, I'm
You're
good.
good. All right. Well, guys, again, thank you all. And I think we're going to finish up this broadcast now. So I hope you all have a good night or good morning or afternoon, wherever y'all are at. And goodbye. Oh, someone said that they